Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for November 25th, 2025. I have just returned from, I like to say 10 days in paradise, but I'm so tired, I can't believe it could be paradise. Um, Took my lovely wife to a wedding in India, which is probably, if not the wedding of the decade, was the wedding of the year. My business partner, daughter got married, and he, he brought 600 of us to Udaipur, India. We had Jennifer Lopez's entertainment, Tiesto, Black Coffee, DJs, brought a whole Cirque du Soleil troupe. Um, it was unbelievable. And we spent a couple days in Dubai where I have not left the airport before, which was pretty outstanding as well. And because I've had such a positive year in the market, I decided to treat myself and my lovely wife to the suites on Emirates, which was again, it was a great week. Just we're so tired. We actually had a weekend wedding in Philly, and then the following weekend, which is we just returned from in India. So um, I went to set up this video tonight. I know a number of folks are starting to find me from Metastock, and I wanted to incorporate the Metastock into this presentation. I will for a couple of shots. And then I realized the computer I use for my presentations, I hadn't put version 20 on yet. So more about that to come. So breadth improves as the markets start to retake the 50-day SMA. Um, I was going to put, does that mean new highs are inevitable? But I think you still got to put a question mark in. My biggest concern about what we saw today was not how the market did. When you look at a well-known website, up on volume 688 stocks, down on volume 79. Um, Lots of really positive things, except they show less than average volume, down about 8% on the NASDAQ and down over 17% on the NYSE. So low volume, strong days are not as important to me. We are in a holiday week, and that might explain everything, but it's got to put an asterisk, at least it does in my mind. But it was a broad-based rally. Let's not throw a damper, wet blanket on it. Let's take a look what we see. Again, my name is Jeffrey Scott. The best email to reach me is marketmripro@gmail.com. My Google group is called Top Down Trader, www.marketmripro.com, and let's go for it. As always, these are for educational purposes only. Anything I recommend should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools, really my tools of top-down analysis and how I apply them. Trading involves risk. You and your owner are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades. I've got tools in multiple platforms, and I'm so happy and proud to be now part of the Metastock family as well. My Google group is called Top Down Trader. Many of you are already members. This is where I post notices that I've put these out here. You'll get notices about web sessions like I'm doing Friday. I promise not to overdo it. It's the only thing close to a mailing list that I keep, and you control the access. You can sign in, find Google Groups, go to all groups, pick what you want, how you want to be notified. But if you want to quit, you quit on your own. There's nothing you have to do. I don't keep you hostage. Um, we put together a leaders index at our October meeting. The goal of the leaders index is to find stocks that are leading at that time and watch them because they'll typically break down before the markets roll over. And they may also rally first. And you can notice our index got close to breaking, had a big reversal on the 50, and the last two bars are showing it moving up off the 50. So I think our index right now is outperforming the markets, which is probably a good sign for the markets. News and earnings, this has been a crazy week where we're starting to get old news Kind of sounds like, even though we're hearing about all these job um, cuts from a lot of big tech titans, that the economy is probably holding up okay. Um, Kind of surprised to see the strength in Urban Outfitters, Abercrombie and Fitch. I think even Gap responded well. Walmart had good numbers, so the consumer seems to still be able to spend some money. Now, Wednesday, we got jobless claims, and then we'll get some old stuff. Thursday's Thanksgiving. Friday, we got a PMI. I'd expect volume to start to dry up by afternoon on Wednesday. So remember that low volume days can be very volatile and not really mean anything. From an earnings perspective, I don't know if anything, I looked at what came out after hours and just to give you a sense of what was working. Excuse me, I came back with a cold. Urban Outfitters up 15%, Autodesk up 6, Dell up 5, Network Appliances up 3. On the downside, Nutanix is down 16%. ZS, which beat on earnings, beat on revenue, raised guidance, is down 7.6. Ambarella's down 7.4. Workday's down 6.1. And Hewlett Packard's down 5.6. I guess those tech names could pressure tech, pressure the NASDAQ. Um, Futures are out early on, first hour. And right now we're seeing kind of flat with the NASDAQ down just a bit. So we'll see. As I say in the lower right hand corner, it's what I think. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Metastock Market MRI Pro is launched. Very proud of this. It's offered at a deep discount. Most everything that you'll see from a charting platform, market timing, sector timing, you can do with Metastock. Now, there's some advantages of Metastock over my other platforms. Metastock offers streaming quotes, real time or delayed. I don't stream in the Market MRI Pro app and probably will not stream. Then again, you'll see there's a cost to real time data. Metastock has the Indian and other international markets. In Metastock, you have a plethora of outside educators where you combine the tools. Folks know how much and I say love, which kind of sounds too affectionate, but it's the right word. Actually, I've met him personally, and I feel strongly Sagar's a great guy. But Sagar and Andy's tools in Metastock, you can combine them with mine in the Metastock. Metastock's a very stable platform. I've owned it in the DOS days. And you get the layout indicators, the timing models, expirations include trendline, break, and bounce, which we can't do in the Market MRI Pro. So if you have any questions about this, if you need someone to talk to at Metastock, the numbers here, I believe, somewhere I thought I saw the number. Um, Actually, I don't see the number. If you don't know how to get a hold of Metastock, feel free to reach out to me. About any information about anything I talk about, my style of trading, performance, um, the name of the wedding, so you can go. It was Mantina, is my business partner. If you want to go and Google it or Instagram it, is all over the place. It was crazy. But marketmripro@gmail.com. For Market MRI Pro customer support, coding at marketmripro.com, and consider joining Top Down Trader, which many of you already are there. Um, this wedding was so crazy that when we went into the lounge at Delhi and they saw we were Americans, they asked us if we just came from the wedding. What an amazing wedding. Live Black Friday event at 10 a.m. on Friday. I'll be doing a special webinar for Black Friday. I'll review the market live. We'll do a special launch announcement. I've got a new partner product that we'll be launching. Probably won't put the product out until the end of the year. But for those that have my existing Market MRI Pro, you'll have an upgrade path to a combined product that I think you'll may want to participate in on the Black Friday event. And info will be in the remarks section below. And then we'll do the meeting in Florida for sure in June and maybe one in June, excuse me, the meeting Florida for sure in October, November, dates to be decided soon. And then hopefully we'll get the June meeting going as well in Southern California. All right. For those that are new to this channel, I'm going to now stop blabbering about weddings and trips and crazy stuff. And now I'm going to get down to business and look at the stock market. And for the first time in weeks, I actually feel confident actually looking at individual stocks that I'm probably going to be buying or looking at buying. Um, I start with what's called the daily brief, and this tells me the 1 day close or change for the various instruments that I monitor here. You can see the Russell led up 2.1, the Diamond's up 1.4, almost a percent on the Spider, Q's 0.62. More importantly, all of them finished at the 89th or higher percentile. So that's a strong day and a strong finish. The dollar was down 0.28. Bitcoin down another 2%. My God, how far is this thing going to drop? And volatility was down, no surprise. With the strong market the last couple of sessions, the new lows have dropped on both the NASDAQ and the NYSE at 52 weeks. And the net new highs minus new lows is now positive. I like to think that this is important because bull markets and new highs are not built on rising numbers of new lows. If we look at the right-hand side, which for those that are new, the way you update my program during the day is anytime you flip that, it'll take 5 seconds or so, it'll update that panel. Um, it's after hours, so we're not going to see any changes. The colored one represents today. The gray one represents the prior trading day. You could see three indexes here, the S&P, 1500, the NASDAQ, and the NYSE. And then the sectors that are built from each of those, you could see much higher positive today than yesterday. More industry groups were up and show you how strong breadth is. 89% of the S&P 1500, 69% of the NASDAQ, and 82% of the NYSE was up. No question that NVIDIA did lead to some laggards um, on the NASDAQ today. If we look at what was leadership, again, healthcare continues to be strong. Discretionary was up 2% as well. Materials 1.5. The laggards were energy, utilities, and even tech was only up 0.27. If we look at the themes that were working, almost 5% on home construction, 4.5% on retail, 2.67 on retail, excuse me, on leisure and entertainment, 2.24 on e-commerce, cloud 2.18, infrastructure 2.13, and biotech was up 1.94. So a super, super strong day. Hopefully your portfolios, what you have left in it, did well. Now, if you're not sitting in a lot of stocks and you're feeling bad about that, even that famous website written by who I think is, or developed by William O'Neill, who I think is one of the best traders of all time, and whose book, How to Make Money in Stocks, is something I read every year at this time, just to make sure I haven't forgotten anything. Their current outlook is exposure of 0 to 20%. So um, don't, you're not alone. I started adding to my portfolio last week. On Friday, I bought some stuff, and then I bought a little bit from the plane as I was flying home. But I'm still have a heavy cash position, so I'm like you. I'm not heavy in stocks, but it was a good day today. If we look at the timing model, I want to do some comparison here. So let's just look at Metastock version. Again, just to show you the folks here that may have come because they saw my Metastock video. What you have is the Bongo, which is a trending indicator, and a WMA, which is the filter I use. And when both of them turn green, you'll get a buy signal. The first day that both of them turn red on the Bongo and you close below the WMA, you'll get a sell signal. That wasn't a good one. That was a better one. So you could see yellow today, which means on the dailies, um, the spider, the Dow, and the Russells have all, since the market's closed now, have flipped to a positive. Now in the Market MRI Pro app, which is a freestanding tool, you'll see the same thing. Spider, green, diamonds, green, excuse me, Russell green, and the diamonds are green. The laggard is the Q, which is going to have to get above the WMA. But that's a massive improvement. So that's enough to get some of my cash deployed, and I am building a shopping list. I am bothered by the volume that I mentioned earlier in the conversation, though. On the weeklies, we've never come out of a buy signal. So we've been in a buy on the weekly since May. Since May, that was on the spiders and the Qs. Since May on the diamonds, and a little bit later, I think early June on the Russell. You also can see how each of them, how within the last month or so, of how far we are away from all-time highs, or very close on the diamond. So I think there's a change in the market. I think what change that we're seeing says that we're still in an uptrend. And now, as the dailies start to turn bullish, it's time to start to add to our positions. I would not be holding a contra ETF today. In fact, one of the positions I added to was TQQQ. When we look at the weekly here, and again in Metastock, I'm not going to flip back and forth, so don't worry about that. The same thing, you could see the weeklies are still in a buy signal. So Metastock and the Market MRI Pro app are the only ones that we built in the timing model. And I love that because it gives you the ability to see, did this actually, look at how much it kept you in the market from here, November 2023, it got you out in January 2025. You missed most of the garbage that happened and you got back in May and you stayed in. That's how I designed this to keep me in most of the time. So timing model says it's okay to be long. Let's look at the index ETFs and see if they tell us anything. Let's click up here. Here's the spider. And there's a lot to love here. I thought this was hilarious when they all pulled into the 100-day moving average, one that I never even put on my charts because it typically doesn't matter. Um, we have had 3 big days up. Seasonality is still positive. We took out the 50 today. Will we get to new highs? I don't know. Those that watch my weekend video know that I talked about 3 roads. One is we shoot up to new highs. The second one was that we would see resistance at the 50. Well, I think you could also see resistance at either this pivot or this pivot, and then pull back and go lower. Or do we go sideways? Right now, argument number one is in play. So do I see anything on this chart that bothers me? Yes, I do. What I see that bothers me is the volume is not that big. You look at the volume on the down day and you compare it to today and Monday, it's a volume issue, and it's probably because it's Thanksgiving holiday, and it will be even less tomorrow. Similar picture on the Qs closing above the 50, not much volume. If we look at the diamonds, again, broken record time, closing well above the 50, above the 17, positive seasonality, and really not much volume. So that's the only flea here that I'm seeing. If I'm looking at the Russell, it too broke over the 50, more volume than yesterday, but really not that much volume. And then if we look at things that you don't want to see high, one of them is volatility, and volatility came all the way down to the 50 today. Now, I'm still concerned, and I would put this, okay, the negative column next to volume is why are we still so high on volatility? This is volatility futures. They were resting down here at 14, and we're still at 19. Does that mean we still have risk? I don't know, but it's a question mark that I would have. And then we already talked about the dollar was down a bit. So the dollar has been marching higher. And when you look at it here, it looked worrisome. But when you add some data, you can see how far the dollar is off of its highs. It's just consolidating here, down a little bit today. Um, Not a whole big story there. If we look at commodities, And all these charts can easily be reproduced in any of the platforms that my material is on. Gold is sort of consolidating, was up a bit, actually down 0.03 today after hitting all-time highs back in October. Nothing nefarious looking there. Silver, especially when you consider the Bitcoin breakdown. Silver was actually up today a little bit, 0.13, but really the same pattern as gold. Oil's just been sick. One thing that I was shocked to see when I was in Dubai is only 1% of their GDP is tied to oil. They did a great job of preparing for a world where fossil fuels are less important. Natural gas actually had a significant drop after running up off the bottom. And then you can see the 10-year was down and the 30-year was down. And I think that has a lot to do with why home construction was one of the leaders. The buckets, this is when we take each stock in the indexes listed here. Each one has a percent B, which is a standard indicator in most platforms. We created 10 deciles between 0 and 100 for percent B, 0 to 10, 11 to 20, 21 to 30, so on and so forth. Then a bucket below and a bucket above. Well, what a switch in just a couple of days as we've massively moved to the right, which shows a big improvement in breadth. 10% of the NYC is above their Bollinger Bands, 9% of the NASDAQ, 15% of the Russell, and 14% of the S&P 1500. Those are not big numbers, but they're big compared to the gray bars surrounding them, which is where they were yesterday. That is not a signal of overbought, but it is a signal of very fast and rapid improvement in breadth. On the market breadth tool, let me just make this a little bit more expanded. And let's pull back here. You'll see that both the NASDAQ on the right and the NYSE on the left took out their 50 today and crossed above. Again, we've already mentioned the devil in the room is that the volume was light. When you look at stocks above the 50 in green, 200 in red, and 20 in white, big improvement in both. Now, when you look at prior big time lows, you're still way off what we saw in July. We'll have to go back a little bit more. So you can get much higher there at prior peaks. So I don't think that that's a signal, but the breadth has clearly improved on both of them. And you could see going down, up, down volume, up, down numbers, new high minus new lows positive, AD lines positive, and up down volume is positive, no new other new signals. So you got to see some strength here when everything's breaking above the 50 and makes me want to have more long positions. The other market breadth tool I like to look at has me scratching my head. And that's because this is a 13-week new high, new low. That's almost suggesting that we're going to have some slowdown and maybe some sideways moves coming. 0.91 on the S&P 500, 0.67 on the NASDAQ Composite, 0.86 on the Russell, and elevated 0.93 on the S&P 1500. It's a short-term indicator that I use to find very short-term tops and bottoms. We're not at that signal level yet, but we're pretty close. Again, this is a holiday shortened week. Probably not going to see much change to the downside. You can see that AD lines have turned up in RSI on everything as well as stocks above the moving averages. If we look at the ratio charts to get one sense of what's going on in the stock market, and what I've done here, upper left corner is Bitcoin. The rest are the S&P 500 sectors, but they're not the sector charts. They are ratio charts. And these ratio charts give me a sense of how they're performing to the S&P 500. I want to perform things that are going up, meaning outperforming. So you can see Bitcoin's in the toilet. Materials is coming up, as is communication. Energy started to weaken. Staples came back some. It had been turning up. Discretionary went up as staples went down. Healthcare has been the king. Um, Technology beaten up, but looks like it wants to come back. Industrial lagging. Utilities are like staples, as was real estate, where they were moving me up and then pull back with the strength over the last couple of sessions. Now, another way of looking at sectors might be to create just plain old charts of the S&P 500 sectors and looking at the timing model on them. And I wanted to look at this today because you're going to notice something. On Friday's video, I only had healthcare with the buy signal. We had lost the buy signal um, on the other one we had. I thought it was energy, but I might be wrong. But if you look at today, we triggered a buy signal in discretionary, communications, materials, financials, industrials. Healthcare remains great. Staples and real estate. So a huge move. Now on Vector on so Metastock, able to do the same thing, and again with the same model with the timing signals below. And you could change on both of these the time frame to match what time frame you want, whether it's intraday or daily, weekly, monthly, etc. So I'm feeling better about the market than I have in quite some time. So let's go into the JAS layout. Now, the layout here of the high jump, price and volume candlesticks with a 200-day moving average, a 17 in green and a 50 in white, the 200s in red. The dots, relative strength versus the spider, and OBV are the same in pretty much every platform that I have my tools. So let's go into the impulse list to start. And you can see that we have 3778 showing up today. So my list that I use here is the NASDAQ plus the NYSE plus the Amex, and I filter them for 100,000 shares and $1. Now I'm going to start with a top-down approach, and then I'm going to come and do bottoms up and see if I can't find at least one stock that I want to look at tomorrow. On the top down side, we've got those same 3778. And if we rank by percentage move in the markets today, staples, healthcare, excuse me, discretionary healthcare and industrials were what led. All right. Now this is going to be different than the S&P 500 sectors or the S&P 1500s, because what we've done here is we've taken every stock in my database. Of course, here's one that's not showing that. That's not what I want to show anyways. I wanted to pull so that each one has sectors, industry, and therefore we can create massive big breadth groups. Now this would then represent the top 10 industry groups. All of them are up except for one. Let's rank them by percentage return. Okay, there we go. All right, number one is biotech, machinery, 3, 4, 5. So now I've got the top three sectors. I've got the top 10 industry groups in the top three sectors, and I've got 835 stocks. Now I can't look at that midweek. Weekends I can, so let's filter that for 500,000 shares and $5. And that'll leave me with 369. Now, what I do here is I'll just give you a sense. One of my explorations in Metastock, and that's how it does its scanning for those that don't know Metastock, one of my explorations is pullbacks in an uptrend. And what it's going to find are stocks that are in an uptrend that have pulled back and then has our magic dots. So let's add a filter here, a pullback in an uptrend. Hit OK. And let's rank it by number of dots. And let's just look at them. SYM. Oops. This was an earnings play. And this must have been feeling that they didn't do as bad as people thought. Let's see. Do we have earnings? Earnings came out last night, 53 cents. Big surprise. Good earnings growth. PE is still massive. The stock actually moved up higher today. New customer AI supply chain, so might be something worth looking at. Sometimes it's hard to chase something that's moved this much, this fast. All right, there we go. And you could see it trades at a massive multiple. If you didn't know what it is, just highlight that. It'll tell you all about it. So that might be one to watch. I just it had such a big move. Woodward is one that also had a nice move, also on earnings, big change and surprise on earnings and revenue. Here has a multiple of 47, so it's growing about the multiple. Um, Big breakout from a base. The longer the base, the more the space. This one looks like it could go considerably. WWD, and we may come back to that. The next one is BNED. I'll pass already. I don't like the pattern. Wingstop. I've never been to one of these and well below the 200. So let's throw another filter here. Let's not look at things below the 200. All right. And then we get KZIA. So this is a biotech, and I'm pretty involved in biotech. I've never heard of this company. So I might look over here and see what is it they got. Metastatic triple negative breast cancer delivers quarter four billion. Achieves initial immune complete response. Well, that's impressive. That's a week away, so it's already in the market. Um, it's very speculative. KBH is one of the first builders that's going to make our list, and I love trend lines. I love to go to the highest one, go down to the second, last one before here, and we got a clean break on KB Home. Now, what I don't like about KB Home is earnings have fallen significantly, but that might be priced in, and part of why. FWRG, excuse me, I am pooped, tired from my travel. Not as exciting. Best Buy had a big earnings surprise. AMTM, what happened here? Earnings, good earnings per share growth, double the PE. That's always a nice sign. What do they do? Mission critical tech in government and commercial markets. Well, you always got to like things that beat earnings. Surprise every time on earnings, had a surprise on revenue. It's going to be compared to 51 cents and not growing very much. XENE is a biotech play, getting ready to break out there. VIR is another biotech. So I will typically start with a top-down view. I think of all these stocks I'm interested in. I think the KB Homes is probably the one that's got me the most interested here. Earnings are not until January. Um, he eased down to 10 and it pays a little bit of a dividend. You can see coming up is TPH, which is Tri Point Homes, which I looked at as well, breaking out here as well. No dividend. Toll Brothers, did not look at that one. Going to show $4.91 versus 463. So, tepid growth. It's had some surprises, but again, this is probably rallying because if yields come down, it's going to help the business. And you could see somewhere KB Homes, we could probably come in here, draw some lines and say trend line breakout. Here's Pulte Home, somewhere as well. So if I had to pick, I'd probably go with KBH, maybe Toll Brothers, and call that a day. Now, the other thing you can do is bottoms up, and a lot of people prefer bottoms up because it's easier. And so I have built in a couple of scans. Now, Metastock, the momentum scan actually will find the A plus stocks. So let's clear my filters. Let's look at A plus stocks. And this is going to bring up just the stocks that pass that. Um, and the one I liked on the A plus is JMIA. And this is one besides KBH that I'm going to work up for a possible trade tomorrow. It's got a lot that I like. Now I got to do some figuring out about its fundamentals because they don't make sense. So I'm actually going to look at a different platform while I'm talking to you and see what they say. What doesn't make sense is the 999s. Probably means our data provider. So on Market Surge, which is another great site for getting charting, but also for getting information, 25 loses 35 cents, but 65% earnings per share growth. 26 projected to lose 20 cents with 43% earnings growth. So it still loses money. It's here it tells us what it does. E-commerce, West Africa, North Africa, East and South Africa, UAE, internationally. Yeah, I saw a bulletin board by them. So there's something interesting there, might be worth following, but that's JMIA was the one that caught my interest here. Carvana, I just have a hard time trading this. I hear about how bad used car dealerships are doing down here, but it's breaking above its trend line. The other favorite scan I have is the A scan. The A plus scan is a double momentum scan. The plain old A scan is typically a pullback and an uptrend with a squeeze and either a momentum or breakout signal. There should be more than four here, so let me see what's going on. Just run that again. Yep. All right. So ADI was one that looked interesting. And by the way, there's probably a few more in the A pluses, but that whatever filter I had left in made my life easy, so I'm not going back. Analog devices, what do they do? You can look here. You can see that earnings are not to February 18th. They traded a PE of 30 at 1.68. Nice earnings per share growth, not much in the way of surprises. And down this list, other things that I liked were here's Pulte breaking out here. All right. Sorry about that. When you don't sleep, fall asleep in the middle of the video. I'm going to bed. I don't care how nice the plane was. I was still sleeping. But so this is looking for a pullback in an uptrend. It's looking for a squeeze, which is the yellow or the green dots, and it's looking for at least one of these first two blue dots to occur. When I look through these, WWD I think came up earlier. Nice breakout here. I like that a lot. Um, Pulte Home, we mentioned this already. Breaking out here. So there's a number of things that look good for tomorrow. And then AGCO, I remember seeing signs that they feed the world. And what a beautiful breakout here as well. So there's a plethora of stocks tonight. We haven't seen stocks like this in ages. For the slight pause when I fell asleep, I'm sorry. Won't happen again, I hope. Red eyes, especially 16-hour ones. Trade safe. That volume still worries me. I think we go higher. I'm not sure we're done going down this year, but I think for the next couple of days, I feel pretty good about the markets. Take care. And those that are new, welcome.